All right, folks, finally things are looking a little bit better for the overall market. And what I thought would be was the new trend carrying the price of AMC here. Actually, it's still confirming the fact that it is moving alongside the market. You can see today that we had a nice jump on 5%. At some point, it was even higher, closer to 7.5% at the very early hour of the trading session. But this is also, when you pay attention, you will see that it's really because the Russell 2000 also gained more than 3%. All right. So if this continues to be the case, based on what I shared with you on the latest video, it might continue to be expected that whenever markets are up, well, AMC could be up. But remember, the volatility here is definitely not as your regular stocks following the market. But there is something actually that transpired when the Federal Reserve today decided to increase the interest rate for the first time since 2018. And what some people are kind of putting the focus around this increasing really now at 0.25%, well, there is another possibility of increasing interest rates to 11 more times from now on till 2023. 11 interest rates increase, 11 interest rate hikes. Do you know what it means for people that are short selling AMC stock? Let me break it down for you. Well, the market already knew 4 months ago that the Federal Reserve had to do something about this inflation. All right. So it's not a wonder that inflation or the Federal Reserve is increasing rates. The real uncertainty is about how many times are they going to increase interest rates from now on till 2023, because that is what we really have to pay attention to, because this is what is going to hurt. It's going to hurt a lot of short sellers, meaning a lot of people that are holding debt. All right. It's going to make, it literally means that money is going to be a lot more expensive. And when money is a lot more expensive, it means your debt, in order to service that, in order to continue to pay interest on that debt, since interest rates are going up, well, it's going to be a lot more expensive for you. All right. So if you add this to what is happening around the world, especially as we have these, Russian assets depreciating by the minute, it's no wonder that Citadel and Sculptor are among bondholders Russia's index that are facing potential default. You can read here that Citadel and D.E. Shaw, Sculptor Capital Management, these three companies are among investors facing a potential default on convertible bonds from Russia's Yandex NV, according to people familiar with the matter. This is a Russian tech company, right, that is trading in the U.S. stock exchange, and the U.S. shares have been suspended for more than 5 days based on their ability to actually not repay, $1.25 billion in bonds, which means that money that Citadel and these other guys invested in this company in the form of convertible bonds, which is really, I lend you the money, and at some point you will be able to repay me that money by converting that money into bonds that I'm lending you into ownership into your company. So that money is literally almost worth zero. Not pretty much zero, but if they are facing the possibility of not being able to repay that money in full, well, it's a default. So that money is going to be gone. Now, imagine how many other Russian companies that Citadel and other investors that are potentially short selling AMC are in. We already know that Goldman Sachs, JP Morgan, and Citigroup are already losing double digits billion dollars based on what is happening there in Russia. All right. So with the market not where it used to be 3 months ago and 6 months ago, literally it means that they're losing money on both sides. Money on the values that they have into their holdings, but also losing money on, well, this is gone, because if they can repay you, they can repay you. All right. So literally it means that they are in a tough corner, because not only they are losing money on their holdings, which means that they don't have as much as they used to continue to use that as a collateral to sustain their short positions. But with these 11 interest rates to come, man, can you imagine having 0.25% increase 11 times. And the thing is, it's not even 0.25, it could be 0.5, depending on how much inflation will be driven in the next couple of months. So keep a close eye on that, because this can definitely be the nail in the coffin we need in order for the short sellers to be forced to cover. All right.